Yeah, well, we have seen a little bit of buying in New York as they get back to business after the inauguration of Donald Trump. More jitters in Canada as we await to see the fallout from the potential tariffs directed at the Canadian economy. For more on the broader stock market, we're joined now by Adam Johnson. He's founder and author of the Bullseye Brief. AJ, great to see you, sir.
Likewise, John.
Let's just talk about a very big week in the United States and how it's influencing how you're thinking about the stock market going forward.
You have to be long, John. You've probably heard the expression up there, and given the typical Canadian sense of humor, which is tongue-in-cheek, you'll probably laugh when I tell you it's morning in America down here, especially with the temperatures as cold as they are. But it really is, John. You have to be invested right now in the U.S. market, and I'll tell you why. We already had an economy where GDP is growing 3%. We already had an economy where unemployment is a very low 4%. We already had an earnings picture where where corporate profits are growing 10 to 12%, and now we have an administration that is business friendly. And I know that some of the commentary coming out of the administration doesn't sound friendly towards Canada when you talk about tariffs, but for U.S. companies, there is tremendous optimism that Mr. Trump and his administration is effectively going to streamline regulations, allow drilling, and effectively argue on behalf of this country and this country's assets and this country's companies. So I know that it probably sounds a little ingracious for me to come on Canadian television and make the argument, but that's the way we're seeing it down here, John. We really are. And I think you have to, as an American investor or as an international investor, I think you have to have your money invested right now in U.S. stocks.
I doubt there is much offense taken, HA. I think people tune in because they're interested in generating wealth for themselves and knowing where the puck is going. I think Wayne Gretzky was there at the inauguration yesterday. Okay, based on everything that you were just talking about, give us some examples of where you would be firing your puck right now. Where would you be putting your money?
Yeah, you bet. I think you have to own core ingenuity, the obvious names, the Magnificent Seven. I would add to those very fine companies. Salesforce.com, number one for customer relationship management software, CRM. I would also add Palo Alto Networks, number one for cybersecurity. I think you have to own the entire semiconductor spectrum because computing power, courtesy of artificial intelligence, is just such a powerful tide right now. And when I talk about the entire spectrum or the ecosystem, I'm talking about, say, a Marvell Technologies, which actually hit my target today, and I'm raising my target. Marvell Technologies, which focuses on the semiconductors that help organize data sets. We think of semiconductors as the brain power. That's part of it, but then there's specialized semis like the ones that Marvell makes that help organize data so that AI can go in and analyze that data. Monolithic power, which makes the semiconductors that regulate the power that is shared between all these semis and these arrays of semis. A Celestica, good old Celestica up there in Canada, but kind of half American as well, which effectively assembles all these components and then uploads the software so that all the software and hardware can work together. It's an entire ecosystem that I think you have to own, John.
All right, and there's a look at that incredible Celestica stock price over the last year, up close to 300%, and still has a lot of support amongst the analysts. Now, you mentioned a lot of tech there. What about other sectors, including, let's say, financials?
Oh, sure. Well, let's look at SoFi, right? That stock's now trading in the teens, SOFI. And for anyone who's not familiar with this company, it was designed as the first ever bank built solely to be online. It started off in student loans, but only making loans to high quality borrowers. And it has diversified the business so that now student loans are only about 12 to 13% of the loan book. And what happens is kids get loans, they pay them back, and all of a sudden then they need car loans, and then they need down payments for first apartments, and they need mortgages and all that. And so SoFi has created a loan book of very high quality borrowers. I sat with this stock for 3 years at $5 or $6, and my investors said, we're really tired of this thing. It's gone nowhere. And now it's in the teens. And I think actually it can get up into the 30s.
Wow.
So it's even a double from here. So there's a financial for you that isn't necessarily on everyone's radar. One that might be Blackstone, the largest private equity and venture capital firm in the world. I kind of view Blackstone in the same way I view the Magnificent Seven. It's a core financial. You kind of just have to own it. I don't own JP Morgan, but I would actually put JP Morgan in that group as well.
Okay, very helpful as always. Before I let you go, you talked about the drill, baby, drill narrative that is very quickly unfolding. And I do wonder how one should approach energy stocks in the face of that, because not all energy names are created equal.
Well, there's an irony, and thank you for pointing that out, John, that not all energy stocks are created equal. There's an irony in drill, baby, drill. It means we're going to have more oil, but that means prices going down. And if you're a driller, lower prices is not actually good. However, if you have more drilling, that's very good for the oil service companies like Halliburton and Schlumberger. They're not taking profits based upon the price of oil. They're making their money by providing contract drilling services. So the more we drill, the more they make. I would be a buyer of Halliburton in particular. I would not, however, in fact, I just last week sold EOG, my favorite E&P, my favorite exploration company, simply because I think oil is going down from here. Also, as we get relief on the wars in both the Mideast and let's hope in Ukraine, I think you take the war premium out. So for those reasons, I would not be buying drillers, but I would be buying the service companies, John.
We're on a roll, so I'm going to ask one more question. This one is not about stocks, it's about cryptocurrencies. And obviously, there's been a lot of excitement in crypto circles, Bitcoin enthusiasts, with the belief that Donald Trump and his presidency will be more friendly to that industry than not. How are you, as someone who's sort of trying to make decisions on where the money's going to go, how are you viewing Bitcoin going forward?
Well, John, as I think you know, in my Bullseye American Ingenuity Fund, I buy only U.S. equities. I don't do crypto. And the one equity that I really like, I think it's the last one standing, and it's also the most promising, is Coinbase. Ticker is COIN. I've owned this thing for my subscribers and for my money management clients since it was down, below 100, 70, 80 bucks. It's a very volatile name. It's up around 300. Close your eyes, it could be 250 or it could be 350. But the reason I like Coinbase is that it's the largest and most trusted platform in this country. So much so, John, that BlackRock, the world's largest money manager, actually uses Coinbase to domicile and transact all crypto on behalf of its clients. So if you are a client of BlackRock, BlackRock is using Coinbase to transact your crypto. That's an incredibly powerful concept, and I think it's why Coinbase has done so well. It really is the go-to name. So that's the one I own, John, Coinbase.